Okay, so looking towards the second half of this year, I mean, a lot of the story for the first half was the Fed, was the Trump trade, the reflation trade. What do you think the second half is going to be?
Well, we had the Trump trade, the reflation trade at the beginning of the year. We moved into the secular growth story with technology stocks leading the way, healthcare doing well later in the second half. We've seen a reversal of that today, right? We've seen the energy names, the reflation trade kind of come back on, but one day we don't think a trend makes. We think that technology remains a leader through the balance of 2017.
Even despite all the sell-off?
Despite the sell-off, we think for those investors that are not at a weighting they want in their portfolio for tech stocks to look now. We know there's been a lot of comparisons to 2000 when trailing earnings were at 70 times. Prices are high, but valuation is still reasonable for tech stocks, and that's the growth story. That's where. Are
you looking at forward or current PE?
Whether we're looking at forward or trailing PE, we look at that compared to the S&P 500. We're barely above the S&P 500 for the tech sector in general. So we think that you stay with technology, use this weakness to accumulate those names you might want.
But why stay in tech, though? I mean, yes, the valuations may be more reasonable than before, but before was rather crazy, right? So is that really the right comparison, or can you find better value elsewhere?
Well, my point there is that people made that comparison because prices are now higher, but valuations are nowhere near that. Valuations are still reasonable. And when we look across the broad spectrum of where we can invest now, our concern is, and we've been growth investors this year, you've wanted to be in growth stocks, not in value. We have GDP in the first quarter at an anemic rate. We expect that growth will only be about 2%, no better. In that environment, in an environment where we see the economic data still coming in mixed and growth not that strong, we want to stay away from value stocks. We really want the growth names. And we want those stocks that depend more on a secular growth story, like technology, than rely on cyclical forces, which we don't have that tailwind right now.